day all. Ira Epstein of Linn Associates with your agriculture wrap-up, and this is for Monday, the 16th of September, 2019, just after 4:15 p.m. Central Daylight Time. The first event, you know about Saudi Arabia, of course, so I'm not going to go into that. We did hear today that lower-level deputies of China and the U.S. are going to meet on Thursday to set up the meetings between the upper levels. We also today got crop reports and the like, so let's take a look at crop conditions is really the right word. In the corn, it was 55% good to excellent versus the 54% that was expected. That's a touch bearish. The markets were looking for things to worsen, not improve, as I said. We'll see how the market wants to go, but here's something that is positive in corn. President Trump has said that he's going to have a plan ready, and that plan on the EPA will require the EPA to calculate a 3-year rolling average of biofuel gallons exempted from federal mandates, then add that figure to subsequent yearly biofuel blending quotas each year. Sounds a little if you will, confusing, but it isn't. He's been under a lot of pressure because he gave away, I think, 81 exemptions this year, when the prior year was like 29. So they want to get back to figuring out how to get corn in demand for the EPA mandates. This is one of the ways to do it. We'll hear more about this soon. In soybeans, 54% good to excellent. Okay. And that was what was expected. Spring wheat, all these numbers are fine, except when you look at the harvest progress, 76% versus an expected 82. So the wheat harvest, well, what's it doing? It's starting to fall behind, and that's something we should look at. Now, on the weekly area chart of beans, we have had a nice rally off these lows of 843 and a quarter. The bias is up. The market, again, up 15 cents, at least to start the week out. We've had a breakout, as I pointed out to you, and we had this declining wedge pattern. This is the high. That was the low of it. I'm giving you my example. Once we got over it, I think you'd agree. The market from this 870 level has advanced 30 cents. So whether you like my drawings or not, I think the wedge worked. That's the way to look at it. In terms of the swing line, and remember what a swing line is. In a swing line, you take the current day and you're looking to see one of 5 rules that I created as to where a line draws. Do you draw to the day's high or the low? It's going to be one of the two. In the case of this, it's in my charting course, by the way, you have a pattern of higher lows, higher highs. That is bullish. What's the risk? The risk is to not get back under 864 to keep the pattern of higher highs and higher lows intact. That's what swing line does. Then I look to see where is the market fighting a battle. Often, it's the 18-day average of closes, which is in red. Now, what's interesting is the market went up to the 100-day average on Thursday, didn't look back, and on Friday, it even advanced a bit more. And look at today. So we have a market. The question is, can it get to the 200-day moving average of closes? And that would be very, very stiff resistance. I also want to know where the Bollinger Band is. So the Bollinger Band came in. And if we come back here, we can see on Thursday, the market got up to and over the 100-day average and the Bollinger Band. That was the first day over the Bollinger Band. Second day was Friday. Third is today. The importance of that is this. 95% of the time, a market will trade within the band. I created a rule of thumb, and it's no more than that, to tell me that when the market, each consecutive day, closes over that, I subtract one of those percentage points. Now, you're liable to say to yourself, you're looking for the market then to pull back. It's a combination of getting under the band and the strength. When markets run these bands and stay over them, it is certainly not a sign of weakness. Typically, if it's going to be a sign that the market's going to correct, you do it right away. You'll get to that band, and the next day you'll spin away, and it's pretty hard to get through over and over. When you get under it like you did here or over here, it's more a sign of strength. It's that simple. That's all there is to it. I tie it together with momentum, which is a separate step. And the separate step says, well, number one, not me, but the market is overbought, as I define overbought and oversold. It's 3 days in a row up here. I would not be surprised to see some profit taking set in. That simple. In the meal market has stayed within the confines of the Bollinger Bands literally since the whole month of August. Now we're halfway through September, and in the process, it's developing more sideways action. Typically, I can't say that it's every time because I haven't done the history on it, but typically, a bull market in the soy complex isn't led by soy oil, it's led by the meal, yet the meal was down 260 today. Yes, it's back to the support of the 18-day average, and that's often what you'll see, that line in the sand zone, try to be what a market looks at. To get this market out of the uptrend, you'd have to take out the low here of 293.80. Otherwise, I wouldn't be surprised to see the pros are nibbling at longs here, hoping to get back to the upper Bollinger Band. But when you look at soy oil, it's a market that's been streaking to the upside. I think that's going to cause some doubt in the soy complex that we're ready to really run. I could be very wrong on this, but that's not what I typically look for, to see the oil gaining that dramatic on meal and then to get the whole complex of the soy running to the upside. We'll see if I'm right or wrong. The market, this is the second day in a row over the upper Bollinger Band, and again, you're overbought. In the corn market, corn is trying to reach for the upper band where I'd expect to see some resistance. Now, admittedly, just seeing the fact in soy that the U.S. and China are getting closer to another deal, and we've heard of pork and beans, you heard that last week. Well, that's probably partially behind what's going on in the soy complex, but I don't know how that affects corn. Corn to me looks more of a market that's got a small uptrend right now, resistance at the upper Bollinger Band of 377, 365 and a quarter, about 9 cents lower is where I'd expect the first support to come in. And what you don't want to see, if you're hoping that you're getting any form of lows forming, is 353 and a quarter taken out. In the wheat market, as far as I'm concerned, you hit your upper target. You got overbought, you hit the upper Bollinger Band, and unlike the beans, it's not trying to keep going over it. So I see resistance setting in here, and admittedly, seeing the spring wheat harvest a little behind could be a little supportive. If the market decides to march on that, the 100-day average is the resistance. The problem is buying over that upper Bollinger Band, well, that could be a bit risky. Remember what we were talking in coffee, that the market hadn't been able to close over an 18-day average in a long period of time? You're going to see that in a minute. You just did it in the sugar. Tried to, at least. The market failed at the end of the day and closed right under it. Is this another zone where the market's failing or not? I don't know. Right now, I think that a lot of pros are looking at this 1068 because you lost the embedded reading as potential to the upside. The problem is the 18-day average was the objective when that occurred by the day, end of the day. So if the market's going to run, the only next target that I have is 1161. We'll see if it can do that or not. I do think the market's out of a downtrend for the time being. The coffee, this is what I was just showing you. If you take a look like sugar, this market was staying under the 18-day average. Sugar failed today. It should have stayed over that number. Once the coffee got over it, it really hasn't looked back. And that's how you take out sideways action here, and the shorts are coming out. I don't know if the market's got a lot of power to the upside or not. It's already accomplished it. And often when you get to the combination of the Bollinger Band and the 100-day average, it's a zone where you get price distribution, and that's what I think is going on right now. Yes, the trend is up. I would not want to see today's lows taken out if I were bullish, because you have an outside day up, and you take that out, you might get a correction back towards wherever that 18-day average comes in. In the cocoa, I think this is a market that's similar to the other softs. Left its downtrend back right here. This is where it was lost. The key was not to get back under these lows, in my estimation, and the market started running the upper Bollinger Band, which it's still doing with an embedded reading. However, the first challenge of the combination of the 100-day average and the upper Bollinger Band happened today. I think pros are coming out of positions up here. In the cotton market, you had sideways action. You moved out to the upside, and once you do that, like the bean market we were talking, it's running over the upper Bollinger Band. The resistance is between right here, the upper Bollinger Band, the 100-day average. You are overbought without an embedded reading, so this market can get a correction setting in almost any time. In the cattle market, the battleground is the 18-day average of closes for the past 4 days. You keep hitting it. If this market gets over 98.55, I think the bulls will show you that they're trying at that point to buy in. That would give you higher lows, higher highs. So if you're bearish, which is where the trend of the market is right now, what's the number you think they want to defend? I would think it's that number. Bears made a stand today against the 18-day average. Do they have the momentum to drop prices down is going to be the question. In the feeder cattle, you broke just enough today to break the uptrend. You got down today. Today's low was 133.55, taking out 133.57. So now that first challenge of the upper Bollinger Band first. The market hit it, backed away. That's something I often look to see what it's going to do there. When you hit it, there's no way to know if the next day you're going to go up further or if you're breaking to it, if you're going to go down further. That's why I think the first challenge is where pros take some of the money off. You just don't have that crystal ball to know. As it turns out, it's pulling back, and I think that's going to disturb some of those that are bullish in the market. And in the hog market, at what point's enough? That's going to be the question. You came from 57.75. That challenge of the lower Bollinger Band turned back. Now you're over it. If you don't stay up tomorrow, the odds favor, and I'd be careful, if you take out this low, today's low of 67.12, more of a correction can set in. Is the market trying to break out? Well, yeah. Is the market getting bull news? Well, yeah. China and the U.S. are talking, and they're talking pork and beans. We'll see what goes from there. You know, one of the things we do at Linn is we write a lot about the grain, the meat markets for you. We're not only talking futures, we're talking what we think the end user is doing. We're talking option strategies in it, and we're trying to give you an idea as to what happened. If you read our end of the day reviews, they'll tell you who is buying what do we think the pros were doing in the market, how much they sold or bought, where do you go with it. And we cover all these markets, but you, as an ag trader, might just want to get the grains and the meats, maybe the softs, get them. You don't have to get everything from us. That's the beauty of it. And if you get our market information through one of our platforms, be it handheld, be our desktops, well, you can even read it right in there. And it does come by email as well. So if you haven't seen what we give to our clientele, maybe you want to, and maybe you just say to yourself, you know, I realize they're not going to be maybe as cheap as the cheapest discounter out there, but they're offering information that I'm not getting anywhere. How do you get it? Give us a call, or you can go to our website. On our website, go under research or education. You'll see what we've got. But the best way to do it, the best way, is our free offers. Just sign up for it right there, and it'll tell you about what we've got. Or you can click here. It'll take you right to the free offer page. I'm Ira Epstein. You have a good day, and I'll talk to you tomorrow.